Welcome to Prosperous Real Estate Investors Network, cashflowbox.com. In this presentation, I will cover with you in detail buy and hold strategy using our private. Let's look at the topics that I would cover with you in this presentation. I will discuss how to buy properties using the private money. We will actually look at a cash flow scenario before refinance. Now remember, this is a buy and hold strategy presentation. It does require purchasing properties using private money and then exit strategy using a refinance. We will look at how the refinance process works with conventional financing, and we will also look at the cash flow numbers after the refinance. Let's look at the acquisition scenario. I have used this property example in other presentations. I will use it again. We're assuming a purchase price of $35,000. I'm also assuming that the rehab cost would be $15,000 to rehab the property. The finance cost of $5,000. The loan amount or total acquisition cost of $55,000. Now for some of you who have not watch the first presentation, the Creative Real Estate Investment Strategy, I encourage you to please watch that presentation before you watch this presentation so you have a better understanding of what is being done here. The market value after repair value would be $100,000. In this case, we are assuming the rent is $1,000 a month. As mentioned in my previous presentations, that we do not bring any properties to our investors who do not have a 1% rent to market value rule per month. That means if the market value is $100,000, the property got a rent for $1,000 or more. That's the only way that we have a higher monthly positive cash flow. In this case, the net equity is $45,000. So you acquired a property using private money, using your equity as your down payment, and you have a 45% stake in the property. In this slide, I would go over the positive cash flow, net operating income, utilizing the private money. Now, private money financing, please understand that the interest rate is higher than the conventional financing. That is why it is important for all investors to look at this deal in light of higher interest rate and look at their worst case scenario cash flow. So the market rent for this property is $1,000 a month. Your debt service is $550. Remember, the loan was $55,000. The debt service, in this case, I'm assuming that the interest rate is 12%, which is on the high side, but that's what we're going to assume, interest-only payment. There's a management fee, 10%. There are property taxes. There's insurance. And it gives you a monthly positive cash flow of $250 a month. The cash and cash return is infinite because to start out with, you did not use any of your own capital or you did not make any capital investment. Now, conventional refinancing, we will look at the same property example. Now you have refinanced this property using conventional mortgage, which is, for this example, I'm using 7% interest rate. You have the loan amount of $55,000. Remember, that's what you owed on the property. You have refinanced it now. Your equity is $45,000. The refinance cost typically will cost you between $2,000 and $3,000. You still have a very good position. You have a $42,000 net equity. Your new loan value, your refinance value of the loan will be $58,000. Again, we are looking at the numbers of what the numbers will look like once you are getting out of the private money loan and refinancing this property into a conventional mortgage. Now let's look at the positive cash flow after the property is refinanced as a conventional mortgage. You have a rent of $1,000 a month. Your debt service now, it's a PIT, it's actually principal and interest. We'll consider taxes and insurance in a minute here. Those are expenses, but the debt service is based on 7% interest rate. Principal and interest is $385. Your management fee is $100. Property taxes, insurance. Now your monthly improved positive cash flow is $415 a month. Again, your cash and cash return is infinite. You have over 40% equity in the property. You have a positive cash flow for $400 a month plus. This property pays for itself and it pays you. Now imagine owning 10 properties like these. Just imagine if you had 10 properties that you acquired through this strategy that give you $400 a month positive cash flow. So you have $4,000 a month in passive real estate investment income. In addition, if you have $40,000 in equity and you have 10 of these properties, you have $400,000 in real estate equity. Now, in my previous presentation, I've advised investors that the best time to get started in real estate investing is today. But I am going to encourage you to take following steps to get started. Get pre-approved. You can get pre-approved by contacting us today. We will walk you through the process. Once you are pre-approved, you would be given an opportunity to reserve a property or opportunities to reserve properties, because we have properties that come and go. These opportunities are only reserved for those investors who are pre-approved. Once you have reserved property, you would be given between 14 and 21 days to conduct your due diligence. We provide you with all the information that you need to make sure that this is a good deal. Your job is to verify the information. Once you have verified it, the due diligence, you will remove the contingency, and within 21 to 30 days, you would close on the deal, and you're on your way to financial freedom as a real estate investor. Thank you for taking time out of your busy schedule to view this presentation. I strongly encourage you to give us a call today. The phone number is listed on the slide. It's 702 area code 371-8838. I also encourage you to bookmark our website at cashflowbox.com. Looking forward to talking to you in person soon. Have a prosperous day.